Look, today, BIS Shrapnel is actually launching a new quarterly service called the Australian Maintenance Masterplan. And this is the first systematic attempt to capture the value of maintenance activities by asset in Australia. It's like our construction project list, except now we've got a massive project list and database for maintenance projects and maintenance contracts across the maintenance industry. Now, the first iteration of the Australian Maintenance Masterplan is focusing on the resources segment because this is the fastest growing segment which probably has the greatest opportunities over the next 5 years. But throughout the next year, we'll be adding more to this service. We'll be adding power generation and water assets to the contractor database. And this will be vital for contractors looking to pick up new work in these growing markets or benchmarking their existing contracts. And really it's a logical extension of the work we do anyway in looking at construction projects around the country. One of the surprises from the report was that actually maintenance activity has fallen in the past year on our estimates, not because there isn't a requirement for maintenance, but because the willingness to fund and execute maintenance hasn't been there. And that's been true of both governments and businesses that have been really putting in strict cost controls on all aspects of operations, including maintenance, to preserve the bottom line. And consequently, the firms that have been operating in this space have been really doing it tough. However, over the next 5 years, we expect the maintenance market to really pick up. Right now, we value the maintenance market in Australia at about $38 billion per year. We expect that to rise to about $44.3 billion by 2020-21. So that's about another $5 billion in this market over the next 5 years. In terms of sectoral performance, mining is going to be the standout performer over the next 5 years. We've had the biggest increases in capital stock in mining over the past decade. It's perhaps unsurprising that all of this stock needs to be maintained. And so we're going to see very, very strong growth in maintenance activity. And look, the pickup in commodity prices since the start of the year will feed into profitability in the mining sector, and we suspect that that will start to filter through into maintenance work. But we've also invested a lot in our oil and gas sector, a completely new large sector now, the LNG market, $200 billion plus of capital expenditure that all needs to be maintained. That's going to create its own maintenance trail regardless.